Hello friends, in the series on the income tax cases, today we will discuss the case of LALIT Kumar KALWAR versus income tax officer. This case has been reported in 106 ITR, page number 373, and the matter has been decided by JAIPUR ITAT SMC bench. The date of the judgment is 30th May 2023 and this case is regarding Section 50C, which talks about the deeming provisions that if any property is sold out, that is land or building, then in that case the sale consideration will be deemed the stamp duty valuation. The stamp duty valuation will be taken as the sale consideration. This is the crux of Section 50C. But for deeming provisions, there is a law that the deeming provision should be applied very cautiously and they should not be stretched to other provisions. The meaning thereby that in the present case, the assessee sold its property for rupees 12 lakh, the stamp duty valuation of which was near about 20 lakh. The assessee calculated the capital gain by considering the stamp duty valuation, but the assessee was eligible for Section 54F exemption, which says that if the sale consideration is invested, if the full sale consideration is invested, then the whole capital gain of the assessee will be exempt. These are the broader provisions of Section 54F. In this case, the assessee invested the sale consideration which was received by the assessee, that is rupees 12 lakh, and claimed the full exemption under Section 54F. The concept is that if the full consideration will be received, the whole capital gain will be exempt, and if the investment will be less than the sale consideration, then the exemption will be proportionately reduced. But it was the point of the assessing officer that since for calculating the capital gain, the stamp duty valuation has been considered as the sale consideration, so the same value, that is rupees 20 lakh, that is the sale consideration, should have been invested to get the full exemption. But it was the submission of the assessee that since I have not received 20 lakh, I have received only 12 lakh, so it was not possible for me to invest 20 lakh. And only in Section 50C there is that the sale consideration should be replaced by stamp duty valuation. But in Section 54F, if we read Section 54F, in that section it is written that if the assessee invests the sale consideration, then it will suffice and the assessee will be entitled to get the exemption under Section 54F. So the moot question in this case is that whether investing the total sale consideration received by the assessee, which was less than the stamp duty valuation, will make the assessee eligible to get the full exemption under Section 54F. The CIT appeal gave the partial relief to the assessee, but when this case came to the ITAT said that Section 54, Section 54B, 54D, 54EA and so on are self-contained sections, and the provisions of Section 50C should not be imported in those sections, and the assessee will be eligible to get the full exemption under Section 54F if the assessee invests the sale consideration received by the assessee, which is mentioned in the sale deed, then the assessee will be eligible to get the full exemption under Section 54F. Friends, this case is very important because it is not practicable for the assessee to invest the stamp duty when the stamp duty takes the place of the sale consideration for calculating the capital gain, because the assessee cannot receive that amount, but in somehow the assessee calculates its capital gain, and there are some provisions which entitle the assessee to get exemption by investing the sale consideration. Then the exemption will be available if the assessee invests the sale consideration, and the exemption should be applicable to the assessee according to the investment made as per the sale consideration. Friends, this case is really very important for every assessee who are involved in these type of transactions. At the end of this video, once again, I am repeating the name of the case, the name of the case is Lalit Kumar Kalwar versus Income Tax Officer, and this case has been reported in 106 ITR Tribunal at page number 373. The matter has been decided by Jaipur ITAT SMC bench and the date of the judgment is 30th May 2023. Thank you, friends.